Good morning, guys. Okay, so first trade of the week from Tuesday the 18th of February. Now, before I get started, very quickly, I just want to thank you all for helping me get to and past 100,000 subscribers. So, the award turned up from YouTube. I greatly appreciate it. I have no idea how so many people out there can understand what it is that I am saying. Okay. With this trade, it actually ties in quite well with what I was going over in Monday, whereby when it comes to trading, you can't always get things perfect, and aiming for perfection usually leads to destruction. So coming into the market today, I was looking at a couple of different things. So because we had broken down below such key levels, which I'll kind of highlight on the chart, I was expecting the move all the way down to 7,360. Now, that touch came in out of hours trading, which is a little bit frustrating because that's kind of the first area where I thought the bulls might come back into the market in a strong way if it sold off and touched there. So it did, the bulls did step in, it did kind of rally higher, but there was no entry for me. And then it started to reject as we got higher. So with this entry, it's kind of on the back of looking at the market, trying to kind of think around what other people will be looking at. And the things that I was looking at was the market had broken down through key levels in out of hours. It had gapped down overnight. We were testing back up into the sort of main area of the gap, and with it breaking down below such key levels, even though it had started the kind of bullish press, it was likely that the bears would try and step back in once again. So into the trade, it starts to break down very quickly. It's very good. And then I'm thinking, now that we're sort of in hours and we're breaking down, it's very likely we are going to test into 360 once again. So that was my sort of initial target, down to 360. But as the trade was kind of developing, I was looking at it and I was thinking to myself, okay, so because we've had such a strong bullish move at the start of the day, it's very unlikely that that entire bullish move is going to retrace so quickly without another attempt at the bullish leg up. So especially over the sort of last, 5 years, maybe I would say even more so, it has become ingrained in people to buy the dips. So every time markets break down, you can see it in things like the US indices and stuff. There's so much kind of willingness to buy dips that if it's at a key level, you really want to be careful if you are going to be selling. So with this one, all I needed to do was kind of change my thinking a little bit, and I thought, okay, so where would another likely buy area be? Because you've got to remember, when a market is rallying, especially to the bullish side, there's that kind of sense of fear of missing out. People don't want to miss the rally, so they're looking to get in. And then I identified a little kind of swing point that looked like a good potential place for buyers. And when it started coming down there, I started hesitating. That's when I got out. So this exit actually turned out to be perfect, because it bounced off of that level, which would have went up into at least my break even if I was break even, and it would have taken me out for a loss. But then later in the day, the market did come down to 360. Now, 9 times out of 10, I would have got that slightly wrong. I wouldn't have got out at such a perfect place, because the market would have continued its bearish movement, or it would have reacted higher up and it would have came back up and I would have got a smaller profit than I was looking for. That's all part of trading. What I don't expect going into trades is the perfect exit every single time, or the perfect trade every single time, because if I start doing that, then I start blaming myself every time things don't work out 100% perfectly. And when you start doing that, it starts to put even more pressure on your shoulders. And if you think about it as a trader, you've already got so much pressure to deal with day to day, that if you start beating yourself up unnecessarily, it becomes almost impossible to trade effectively. Now, you should beat yourself up to a certain extent if you're making mistakes, if you're jumping into stupid trades, etc. But you shouldn't be beating yourself up if you are not exiting or entering really the market at the absolute perfect area. Yeah, it's frustrating if you leave profit on the table. Yeah, it's frustrating if you get out not at the, you know, if you've been at a good profit target but then it's retraced a bit and then you've exited. Yeah, it's frustrating, but it's just part of trading. You know, it's random buyers and sellers that you don't know. You're trying to interpret the most likely outcome, and if you can do it over an extended period of time, it's going to leave you in a really good way. So yeah, trade worked out really well. I have been trading a little bit differently this month. Just trying a couple of different things. Not so much changing the way I trade, but just changing, making myself even more strict just to see if I could do it. Because the goal is eventually to trade less. And to trade less, I need to kind of take a lot fewer entries and look for kind of bigger profit targets on the entries that I do take. So I've been kind of practicing that this month, seeing if I can make it work. It's going well so far. But I need to see it in, you know, a slightly quieter month also. Okay guys, so as always, I hope that was helpful. Thank you once again for helping the channel break above 100,000 subscribers. I'm going to need to find somewhere in the house for that award. I hope you're all having a fantastic trading day, week, month. I'm James Orr, and thank you.